You ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 7th day of January, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you're joining us via our YouTube channel, youtube.com/CFRN, we're glad to have you with us. Just know that I'm not able to monitor the chat box on the YouTube channel, but I'm going to tell you how you can join the show each day, where you will have access to the question box so that you can ask questions and participate in the discussion. Now, you only have to do this one time. Go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. What will happen is once you do that, each day right before the show starts, you'll get an email, and in the email there'll be a link. Click the link and you're in like Flynn. You don't have to type anything in, no login process. Just click the link and you're in. Now, as for the YouTube channel, youtube.com/CFRN, not only do we broadcast live each and every day on our channel, but we archive every daily show. Currently, we have over 1,800 daily live broadcasts archived there for your educational and viewing pleasure. So with that said, let's open with a word of prayer. Now, we've all heard the story of the prodigal son, the one who was young and wild and crazy and wanted his inheritance up front and went out and blew it and ended up eating with the pigs. And well, you know the story. We've all read it. So we'll talk about the prodigal today, but I'm going to share with you Psalm 71:20. Though you have made me see troubles, many and bitter, you will restore my life again. From the depths of the earth, you will again bring me up. You will increase my honor and comfort me once more. Now, here's the rub. How do you trust God and not worry when you see your child starting to spiral downward and out of control? Now, I know that in this audience we have many folks with young children, many folks with grandchildren, and we even have some grandparents who are acting as parents because their children weren't capable or aren't currently capable of doing the job. So this is an issue that has spanned generations. So the question is when you're dealing with your children, your grandchildren, whatever the case might be, how can you know when to say something and when to just let your child work it out for themselves? How can you trust that God ultimately has good in mind when everything looks so bad? One of the most intense concerns a parent has for their children, apart from their concerns for their physical safety, is the concern for their spiritual condition. We fear our children will turn their backs on their faith and all they were taught and needlessly stumble through life. That situation can not only be fearful, but it can make us feel so helpless. I've talked to lots of moms and dads and asked them to share with me their secret to maintaining hope for a wayward child when the situation looks absolutely hopeless. And their answer is always the same. Their hope is in God, not in their child. Their hope is in God's ability to turn that child's heart back towards home. I have a friend who witnessed her daughter self-destruct into drugs and a dangerous lifestyle for several years. Saw God turn her daughter's heart around. But she said her only comfort during the season of her daughter's rebellion was praying scripture over her daughter. Isaiah 49:16 was especially encouraging to this one woman. Isaiah 49:16 says, "See, I have engraved you on the palms of my hands. Your walls are ever before me." While that verse prophetically refers to the nail prints in Jesus' hands, it symbolizes to us that Jesus knew each and every person by name that he would die for. Those nail prints were like an engraved name on his hand. Children will hear our voices in their heads, and they may try to shut out that voice at times if their hearts are hardened. Children will also hear their friends' and peers' voices, and the voice of the enemy who is seeking to lead them astray. But we as parents want God's voice, the voice of His Holy Spirit, to be louder than anyone else's voice. And so if you have a prodigal son or daughter in your life, a grandchild, or you know someone with a prodigal son or daughter, I want you to join me in this prayer. And I want you, I'm just going to be very transparent today. As I pray this prayer, I'm going to insert my own daughter's name in the prayer. My daughter is Emily. I know you've heard me speak of her before. But as I pray this prayer, I want you to insert the name, as you pray along with me, insert the name of the prodigal son or daughter in your life. Heavenly Father, create in Emily a pure heart, O God, and renew a steadfast spirit within her. That's from Psalm 51:10. Though you have made Emily see troubles, many and bitter, I believe you will restore Emily's life again. From the depths of the earth, you will again bring Emily up. You will increase Emily's honor and comfort Emily once again. Thank you that your word says, I am convinced that neither death nor life, neither angels nor demons, neither the present nor the future, nor any powers, neither height nor depth, nor anything else in all creation will be able to separate Emily from the love of God that is in Christ Jesus our Lord. And it's in Jesus' name that we pray. Amen.
Amen.
Amen. All right, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow is up 114 points, but the NASDAQ is down 73. S&P 500 is down 2.5, and the Russell 2000 is down almost 9. In the commodity basket, crude oil down 65 cents, trading 78.81 last. That's a drop of almost 1%. Gold up $4.30, trading 1793.50 last. Silver up 9 cents, trading 22.28 last. The Asian markets at the close. The Nikkei was down 9 points. The Shanghai was down 6.5. But the Hang Seng posted a 420-point gain, which is almost 2%. And in the European markets at the close, FTSE posted a gain of 34 points. The DAX fell 104, and the CAC dropped 30. That gives us a mixed day in Asia, a mixed day in the UK, and so far it is a mixed Radio Friday here in the US of A, with the Dow in the green and the other three major indices, the NASDAQ, the S&P, and the Russell, in the red. With that said, let's go to Michael and get a recap of everything that happened this morning in the live training room. After that, I'll be back. We'll go over the Logic 247 alerts, the concierge trade alerts, and at any time during the broadcast, if you have a question, type it into the question box and we'll be happy to answer it for you. Okay, Michael, I've got you locked and loaded,
All right.
so it's all yours.
Thank you.
Take it away.
Thank you. Hang on, I gotta load one other thing up right here, and then I will be ready. Here we go. All right, here we go. Ready. Good afternoon, everyone. Happy Friday. Today is the 7th day of January, 2022. All right, so here, if you have not taken a free trial with us and you want to take a free trial with us, then go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us your biggest training challenge so we can tailor one-on-one training just for you. Hit the send button. You're going to be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, we don't know that you took the free trial, so you got to click on that link. Now, the recaps. All right, I am going to get this fixed this weekend. I am going to get it fixed this weekend. All right. I didn't do all the stuff down at the bottom because, all we need is the daily so far. Keeps track of the daily and monthly, and the monthly and yearly are the same thing this month. But anyway, today is the 7th day of January, 2022. We picked up 7 ticks in crude, 21 in gold, and 31 on the ES. Put us at plus 667.5 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. That point was up $100 a contract, and it took a total of 25 trades this morning. So on the month now, we're at $4,775 a contract. That's over 5 trading days, averaging $995 per contract per 2-hour trading day. On the year, now we've gotten our goal every single day, so 505 so far. Way to start off the year. Woo-hoo. And 955 for the first week. Average is not bad either. 4,775 on the first week. That's pretty good. We'll take it. We're going to set the bar for the rest of the year this month. Okay, we've now gone 108 days since our last down day. And yeah, I can show you all that, but it's all the same as this up here. And I haven't done the math for that stuff down there yet. Or fill out the formulas. So let's get into what we did do. All right, almost everything we did was on the ES today, but I'll show you the one crude trade that we took. We might have taken more than one, but we only had one that did anything. Huge move right here. I think I had gone for a walk when that happened. And there was no trade opportunity in there. I know some guys did get in. Yeah, okay, so I did have a couple of break-even trades in here. Right, so this was the one trade that I actually did anything with on crude. See, it started out right here. It looks like, no, the slingshot wasn't set up for the short there. It did set up for the short here, but you couldn't do it because it was going into unbroken dynamic support. It had one right here that I missed. That would have been a nice one. I would have gotten a goal on that. But I ended up taking this one right here, and I got 7 ticks in profit on this. I had already gotten a goal by this point on the ES. But here I got 7 more ticks, and that put me at +7 in crude. Okay, then we went through here, across here. There was one right here that ended up going up, but it would have been a break even had I gotten filled on it. And I just had break even, break even, break even. And you know, when it was up here, I could see this down here, and I pointed it out, and it took it a little while to get down there, but it eventually did get down there. So if you stuck this trade out right here, just left your stop where it was up here, your entry would have been right here at 46, so your stop would have been up at 54. Your stop would have been up here the whole time. It would have been up here. So you would have gotten that whole move down, but I don't suggest you do that. So I got a break even here and a break even here. And then the market just got all sideways and messy. We didn't do anything. Then had one big move and then all sideways and messy again, and we didn't do anything. Yeah, crude wasn't easy to trade today. And if you look at it on the 30-minute, it looked like this morning it came up and it was trying to get up into here, and it hit the MA1, and it just really didn't give a lot of anything. Once you get up to the MA1, it just kind of hung there for a little while, and then it moved down off the MA1. And so right now we're at this swing low right here. If it breaks through this, going into the afternoon here, this is going to be your woo spot. Okay. That's going to be your woo spot going into the afternoon. Okay. That looks like a pretty nice one right there. If it breaks down through 78.70. I don't know if we have alerts for that right now, but that's what it looks like on this time frame. Then you get into the break, and let's see, during the break, there was one short right here. It looks like one short right here. There was one right here that could have included that one. There was one right here. Another one right here. And that was it for crude oil. Okay, so that was crude this morning. Now we'll go to gold. Let's scroll back to here. All right. So gold started out right in here. I missed this in the first few minutes here. That wasn't a trade. This was from right here. That was a nice short. I'd have gotten the goal for the day on that if I'd have taken it. I would have been worried about the cycle though. So maybe that's why I didn't even highlight it or put anything on it. But I had a break even there. And then the next one, I picked up 8 ticks there, then 3 more ticks there to get me to +11. Then I went from 11 to 17, so it looks like 6 ticks somewhere. And then went from 17 to 22. So we had 5 ticks. And then from 22 to 29, so we had 7 ticks. Then we had a break even. Then we went from, hang on. It looks like I didn't put this one in, and then we stopped out. So I didn't put this trade in right here, I think. I don't remember the trade. I'd have to go back and look, but it looks like it was probably a 5 or 6 tick trade. But anyway, I did put the stop out in. So we went from 29 to 21 after the stop out. And then during the break, we get in here, and it looks like there was one long trade from right here. Another one right there. And it just triggered a short right here. Okay, and that was gold. We ended with +21. It was actually better than +21, but +21 is what I got in the books. The ES. Now let's look at the ES on a larger time frame here for a minute. This is what we're looking at. Now, what I was looking at this morning, I had drawn this bar in, figuring this bar, it was while this bar was still building. And I had originally drawn it in up here, like where the green line is right there. While this bar was still building, figuring that this bar wasn't going to go as deep as it did, but it did. And I was looking for a 50% retracement of this bar right here, which is where the yellow line is. and where I ended up drawing that line after I fixed it. But the other yellow line right here was a 50% retracement of this whole move. And at the end of the morning session, we were right in here. And at the end of the morning session, I was thinking during the break, it would probably get up here to the MA1 and fail off the MA1, but it's gone all the way up to the BBC and failed off the BBC instead. So retracement wise, this is like a 62% retracement of the whole move. Okay, because the yellow line is a 50. So this is like the 62, and the 75 would be right up here somewhere. Right there somewhere. But that's what it looks like on the 30-minute. So by the end of the day, what I'm thinking is if we're going to bounce off this really, and this bar right here, if at the bottom of the hour in the next 4 minutes, this thing closes below the MA1, then we should sell off all to the end of the day. Okay, that's what I'm thinking. Now, we had a lot of trades here on the ES today, so I'll get into them. I'll get started with all of them. All right. This doesn't look like too many. Is this today? Yeah. It's not looking like I did all this right. Because we got our first trade on the ES. First trade on the ES, we picked up 8 ticks. Then the trade after that, we picked up 8 more ticks. And it doesn't look like I wrote those in. And then the trade after that, we picked up 6 ticks. This was the trade after that. Okay, so somewhere in here we picked up 8 ticks, and somewhere down here we picked up, somewhere in here we picked up 8, and then we picked up another 8. And then we picked up 6 right there, and that got us to 22. And then we had a break even, and another break even, and we picked up 2 to get us to 24. Then we stopped out pretty much to the tick. Got us back down to 16. Then I had to work my way back up 2 ticks at a time. Got 2 there to go to 18. 2 there to go to 20, break even there. Then I went from 20 to 26 down here. That looks like a lot more than that. And then went from 20 to 26. And then I didn't put that in. Looks like there was a short in here. I think this is when I went for a walk. There was a short in here and another short in here that I missed. And then it turned around and it started looking long, and there was a long right in here that I missed. Then the slingshot was all messed up. I took a short here and I stopped out. That put us back down to 18. Then I had this trade. This trade right here, we went from 18 back to 28, so I had 10 ticks. And then I had a break even, it looks like. And then, no, this might have been the 10 ticks. There's something in here that I didn't write down. And yeah, I think that this was the 10 ticks, and we had a break even. Then we went, because somewhere in here we stopped out too. I think, yeah. We went from 28 back down to 20, and then we went up to 24, and then went from 24 to 30. I think this was 24 to 30 in here, or maybe this was 24 to 30, and that's what it was. This was 24 to 30, and this was 30 to 31. But we had a whole bunch of trades this morning on the ES. We ended with plus 31 ticks. I know we kept going up. Like I got up to 20, I got up to 26, then I got up to 26 and I stopped out. I got up to 24, then I stopped out. Then I got to 26 and I stopped out. Then I got up to 28 and I stopped out. So there's one stop out that's not in there. But I got up to 28 and I stopped out, and then I worked my way back up to 31. Now, during the break, there was a lot of movement in here. There wasn't anything you could do right through here. Okay, there's a lot of spots where you couldn't do anything through this, sadly. Right in here, you started to get some action where you could have done something. I'm just looking at the slingshot down here. You couldn't really do anything there, but you could have shorted right here. That would have almost stopped you out and then given you a nice ride down. You had another one right there. You really didn't have anything here on the long side. Then it turned around and it started dropping again. And right here were the spots you could have shorted. And one more right there. So it was a pretty active trading day today. We had a lot of activity this morning. Okay, and hey, there's one thing I wanted to go over that, right now, as we roll out into TradingView, we're going to start rolling out new products. And I wanted everyone to know, if you are not a passport holder, you're not going to have access to those new products. And I just wanted to show you an example of one. This is a thing that I put in the active passport holders discussion group, where if you were an active passport holder, you would be able to see this. But I suggested this SPY put on the 29th of December. And yesterday, this is where it was, sitting right here yesterday. And today, it's actually even a little higher than that. It expires today. And right now, it's even a little higher. Well, it was before this meeting. At the end of, as a matter of fact, at the end of the morning session, it was a little higher than that. So it had a 300% gain in a week, and it had a maximum of a 500% gain in a week. But that's the kind of stuff, if you are not a passport holder, you're not going to get access to things like that. And there's a lot more than just that as we keep going forward into crypto and the metaverse and all that kind of stuff. So if you're not a passport holder, you need to become one. And I mean, that goes for anyone, really. If you're not a passport holder, you should become one. And if you're a mentoring partner and you want to upgrade to passport, then that's always something you can do too. Okay, just let us know that you want to do that. All right. Let me go back here for a second. The spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 7th day of January, 2022. We made 7 ticks in crude, 21 ticks in gold, and 31 ticks on the ES. Put us at plus 667 on the morning session. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 25 trades. On the month now, we're at $4,775 a contract. This is for 1 week. It's over 5 trading days, averaging $955 per contract per 2-hour trading day. We've gone 108 days since our last down day, and we've gone 5 out of 5 days so far this year getting our goal. Okay, if you've not taken a free trial with us and you want to, go here to eminitrainingschool.com, and right here, just fill this out. First name, email, phone number. You can tell us biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. Okay, there was one thing I wanted to show to you. Let me see if I even have it open. I may have it over here. That one option. Here, if I hit option chains. If I can bring that over. It's only gonna let me bring it over. Oh crap, hang on. That drives me nuts when it does that. Hang on. One more second. Here. I think I can bring this over. That was showing too much information. Okay, so the 470 puts right now, or what I was showing, these 470 puts are now 325 is what you would be able to sell it for, and they're at 112 on the 29th. And that's not even the highest it was, but that's where it is right now. Okay, that's the kind of stuff you'd be able to get if you're a passport holder. All right, that's it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I'm ready. All right.
Okay.
Recap of the recap.
Today, it took 3 minutes and 1 trade to get to $100 a contract.
Good job.
Thank you. Thank you.
Okay, that's what happened in the first 2 hours of Wall Street this morning in our live training room. And so far this week, we are in week 179 of Logic 247. We've now issued over 9,400 individual alerts over the last 179 weeks. This week, which started Sunday night at 6 p.m. Eastern, which is when the Globex markets open, and once they open Sunday night, they remain open until Friday afternoon at 5 p.m. Eastern. There's a 1-hour break every day from 5 to 6 p.m. So last night, or yesterday afternoon at 5 p.m. Eastern, the Thursday session ended. And then last night at 6 p.m. Eastern, the Friday session began. Now the alerts come out around the clock 24/7 whenever opportunity presents. Could be 2 a.m. or 2 p.m. We have traders around the world, so our day session is their night session, and vice versa. Since the market opened Sunday night, we've issued a total of 78 alerts. 17 never triggered. Still waiting on the outcome of 3. We've had 58 actionable alerts, of which 3 or 5% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Now, along with the logic alerts, which flow around the clock, we still have our original alert service, the concierge trade alerts, or CTAs as we call them. Now, this is a static report published shortly after the Globex Open. The numbers are good for the entire session. The best way to use this report when it's published is whatever markets you trade, make note of the current price at the time the report is published. Using the ES as an example, if price starts trending up towards 47.02, that is bullish. And so our strategy will look for opportunities to be long the market. That's also where you'll use Logic 247 and everything you learn in the live training room to find opportunities yourself to be long the market. If price starts trending down towards 46.85, that's bearish. So our strategy will look for opportunities to be short the market, and that's where you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be short the market. If you want to grab a screenshot of these, do that right now, because after a couple of headlines, we'll go straight to the charts and we'll walk through each and every one of these markets and the alerts that accompanied them. Okay. So, we'll start out with a little bit of tech news. Documents show police departments create fake social media accounts using artificial intelligence generated images. An insider investigation found that despite platform rules against doing this, police departments from New York to Ohio have been trained to create fake Facebook and Instagram accounts to assist in investigations. Documents obtained by Business Insider describes tools law enforcement officials can use to create accounts, like a fake name generator, a username generator, and a This Person Does Not Exist tool, which creates images of human faces using artificial intelligence. In videos posted to social media, the course's instructor, an active duty police officer in Maryland, has said that even though it's against Facebook and Instagram's terms of service to create fake accounts, police can and should do it anyway. He has also said the social media investigative tools can be used for other purposes, including manipulating women. Now, this same technology that's being used for the forces of good by our police, you can bet your bottom dollar that that same technology is being used by criminals and evildoers to take advantage of you and your checkbook, bank account, and anything else you have of value. France has fined Google $170 million. French authorities hit Google with the record-breaking fine for making it too difficult for users to opt out of cookies. Facebook was fined for the same offense, and both companies now have 3 months to comply, or they will risk fines of $113,000 per day. OpenSea, that's a website, OpenSea, OPENSEA, is like eBay at the beginning of the modern internet. Tech investor Samil Shah has declared OpenSea a startup for buying and selling NFTs, that's non-fungible tokens, and is now worth $13 billion, the breakout tech startup of 2021. Experts weigh in on what's next for Elizabeth Holmes. They have now found that one of the jurors lied on the questionnaire. The questionnaire asked, have you ever been a victim of sexual abuse? And one of the jurors checked the box, no. But investigators on Elizabeth Holmes' team have found out that that was not true. Will this lead to a mistrial? We don't know. What is interesting is even though Elizabeth was convicted on 4 fraud-related charges, she still has a lot of fans out there. They call themselves homies. You've heard the term homie. Well, these are homies. Go figure. Instacart is vetting a startup that uses robots to deliver groceries in 10 minutes. The startup, called Tortoise, builds floating warehouses on wheels that store up to 100 food and beverage items, and it's pitching the robots to Instacart as a rapid delivery solution. Imagine that. This year's CES saw it all, from mind-controlled earbuds to autonomous tractors. If you Google this year's CES, you can see a list of everything that was shown, from the practical to the downright crazy. Nike has sued Lululemon for patent infringement in a lawsuit filed Wednesday. Nike claims Lululemon's Mirror Home Gym infringes on 6 patents, but a Lululemon representative called the patents overly broad and invalid. And speaking of the homies, to the fans who sell Girl Boss shirts, Elizabeth Holmes is still a femme fatale, being found guilty on 4 counts of fraud earlier this week. The Theranos founder still has a gaggle of fans, and as I said, they are called homies. And BMW just unveiled its first color-changing car. Using e-ink technology, the same tech used to power Amazon's e-reader, the Kindle, allows the car to change colors with the push of a button. What will they think of next? I honestly don't know. Biden says Trump lies fuel the January 6th Capitol attack. He went on and on yesterday about how it was all planned by Trump, for Trump, and about Trump. And, well, it's just basically political theater. Political theater being used by Biden to distract from his own policy failures. Remember, his campaign promise was that he was going to stop coronavirus dead in its tracks. And as we all know, that hasn't happened. In Kazakhstan, troops have been told to use lethal force against protesters. Kazakhstan's president said in a televised address today that he has authorized police and soldiers to shoot to kill when confronting terrorists participating in violent anti-government protests in the former Soviet nation. Those who don't surrender will be eliminated, the president said. He dismissed calls for talks with protesters as nonsense, saying it was impossible to negotiate with criminals and murderers. 26 protesters have been killed as of today. Another 18 have been wounded, and more than 3,000 people detained. 18 law enforcement officers reportedly have died in the unrest, and 700 have been injured. The demonstrations started over spiking fuel prices, but truly they reflect the broad dissatisfaction with the government. 6 of President Biden's former health advisors on Thursday publicly called for revising the government's COVID-19 strategy to focus on living with the coronavirus instead of trying to eliminate it, which is what he promised and failed to do. In 3 opinion articles published in the Journal of the American Medical Association, the experts who served on Biden's transition team said the United States should avoid getting caught in a perpetual state of emergency and start approaching the coronavirus as one of several respiratory viruses to address together with data tracking, testing, and goals on limiting hospitalizations. The World Health Organization confirms a record 9.5 million COVID cases in the last week. Now, if someone goes into the hospital with a broken leg to the emergency room and they get tested and it turns out that they have COVID, the official record never reflects the broken leg. It only reflects the coronavirus. So these numbers that you see, these escalating numbers. Now, any life lost is one too many. And I have lost a couple of very good friends to coronavirus. So any life lost is one too many. But be careful what you believe, even when it's published by our government agencies. The Supreme Court is going to hear arguments on Biden's vaccine mandates. They're being challenged. So our prayers are with those who sit on the Supreme Court to do the right thing. U.S. mortgage rates jumped this week to their highest level since May of 2020. The 30-year fixed-rate mortgage averaged 3.22% in the 7-day period that ended Thursday, up from 3.11% the previous week. A year ago, the average 30-year rate was 2.65%, the lowest on record. Ultra-low interest rates have helped drive a housing boom since the pandemic started 2 years ago, as people who held onto their jobs and had savings took advantage of low borrowing costs to buy bigger houses as Americans shifted to working, studying, and socializing virtually from home. Economists have expected rates to rise as the economy improves, inflation looms, and the Federal Reserve tapers its efforts to boost the recovery with asset purchases and low rates. And the Moderna CEO has said people might need a 4th vaccine shot next fall. Somebody should really be looking into who owns the most stock in these companies that are creating these vaccines. Pfizer, Moderna, Johnson & Johnson. Now, if you do a deep dive, you'll find that a lot of the stock is held by hedge funds that are offshore Cayman Island enterprises. But you got to dive even deeper to find out who is invested in those funds and whose pockets are getting filled every day with every shot, with every booster. It's very discouraging. And our last headline, Peter Bogdanovich, who directed The Last Picture Show, has now passed at 82. Our thoughts and hearts and prayers are with the Bogdanovich family. Okay, with that, we can go to the charts. We'll go to the ES daily chart. As you can see, we've traded now 2 days. Actually, this will be the third day that we've traded below the daily BVC. Initially, the 38% fib held, and then we reached down this morning and almost touched the 50% fib of the last leg up, which the low was put in December 3rd. The high was put in January 4th. Here's the 24% fib. Here's the 38 fib, which looks like it could hold. We won't know till the end of the session. Or we could find the session ending at the 50% fib retracement. Below the BBC, 3 days. All 3 candles are still touching the BBC. And so by this time next week, we may be able to say that the pullback held, because the pullback holds more often than it doesn't. But the market does look awfully heavy with red and falling overhead. The daily step line is now below the 24% fib, and there's every good possibility that we could see that 50% fib retracement by the end of the session, if not the end of today. On the open Sunday night, we could hit that. And any time on a daily chart that you have a 50% fib retracement, hedge funds are paying attention, the deep pockets, the institutional traders, and so a 50% fib retracement on a daily chart is almost always good for a significant bounce. Now the same could be said of a 24 and a 38. But investors, the deep pocket investors, seem a little bit gun shy at the moment to expose their capital to the risk that's coming in the face of higher interest rates and all that's going on in the world of politics, pandemics, and so much more. On the 30-minute chart of the S&P 500 Emini futures, last night's long CTA triggered while we were in the workshop, 47.02, and then the short CTA was at 46.85. So we have what's called two-sided action. On the first trigger, we ran up to 47.0575, so that's 3 3/4 points at $50 a point. This trigger here, not all triggers are created equal, but we did overcome blue and climbing, which can often be resistance once it's directly above price, but we did punch through, and we put in a high at 47.0375, 1 3/4 points. Then we triggered on the short side. Now, here's the London Open, 3 a.m. Eastern. In the second half hour of London trading, the markets moved lower, and we put in a swing low at 46.7875. So we'll call that 46.79. That's 6 points at $50 a point. It's $300 per contract traded. Price then got back above the BBC, consolidated at the weekly trading zone. We did not trigger again on the long side. Blue and climbing turned to red and falling, which led us to this trigger at the CTA. And from 46.85, we dropped to 46.70. That's 15 points at $50 a point. You can do the math. Then we get back above the trigger, and we trigger again. The swing low on this drop was 46.75. That's 10 points, $50 a point, $500 per contract traded. Back above the trigger, still got red and falling. and that took us down to the low at 46.53.75. Let's just call it 55 for the simplicity of math. That's 30 points at $50 a point, $1,500 per contract traded. And then we got back above the trigger and triggered again. And the current trigger has taken us down to a swing low at 46.72. So that's 13 points at $50 a point per contract traded. So we had 1 trigger, 2 trigger, 3 trigger, 4 trigger, 5 triggers off of 1 alert on the short side, 2 triggers on the long side off 1 alert. Once an alert triggers, there is a greater probability of it triggering multiple times than not triggering multiple times. And you'll notice that on each one of these triggers, we put in a low, and then a lower low, and then a lower low. So what happens here? Got a little 30-minute doji going on. There's 4 minutes left in the life of this candle. When the next 30-minute candle opens, if it starts to print red, if I were you, I would allow price to get below red and falling, below the step line, and then I would look to take advantage of this window of opportunity right here. Okay, that's a very conservative window of opportunity. You could choose to take a short on a break of the low of the current candle. And again, we're going to get a new 30-minute candle in about 3 minutes. Okay. Now, if the new candle starts to print green and we rally up to the BBC, we expect that to be good resistance, as it was here and here and here. And if we rally up, we would expect it to be good resistance again until proven otherwise. Now, if buyers are truly committed and we get above the BBC, and we have a nice window of opportunity right here, basically 46.89 up to 46.93. About 4 points in that. Okay. At $50 a point, that would be $200 per contract traded. So whichever way the market goes, because we're trading futures, we don't care if the market's moving up or moving down. The only thing we don't want is to see it just move sideways. Okay? Price can only do 3 things. It can go up, it can go down, it can go sideways. Like this, consolidation. That makes for some very difficult trading. That's where a lot of traders who have worked hard and built up their account size, and they get into a situation like this and not understanding this dynamic of this consolidation at a weekly trading zone, right? You know, what they've managed to earn over a couple weeks, couple months, can vaporize in a series of trades if you're not careful. So no matter what time frame you execute on, whether it's the 4-tick range, a 5-minute chart, a 610 tick chart, which we talked about a lot in the workshop last night, be aware of what's happening in a higher time frame than the time frame you're actually executing in, because that will give you the better idea of what the market is most likely to do next. Now, we cannot predict the future with certainty. No one can. I know some people tell you they can, but the truth of the matter is no one can. God never gave Adam the ability to change the past or know the future, and the two are inextricably linked for eternity. What we can know with certainty is what the next high probability move is. And I just explained to you what the next high probability move is based on the next candle that we're going to get in about 30 seconds and what color it starts printing. Okay. Now, we're not going to dive right into a trade as soon as the next candle opens. We want it to prove itself. Is it going to go up to the BBC and get rejected? If so, then we want to trade to the short side. If we overcome the BBC and take out this swing high, then we want to be long. So there's opportunity in either direction. It just requires patience and self-discipline until price proves itself. Okay. Now these weekly zones, this is the lowest weekly zone this week for the S&P. It is a rare week that we close the week below the lowest weekly trading zone or above the highest weekly trading zone. But we've published the zone since December 14th of 2009. And there have been, of course, a handful of weeks where that has happened. And this certainly could be one of the weeks where it does happen. So we've got our new candle. We're printing red. So look for a break below red and falling, below the low of this candle. Now, you could enter on a break of the low of this 30-minute candle, or you could be patient and wait for a break of this low, which gives you this nice window of opportunity right here. Okay, the Dow. No trigger on the long side. The vertical line on the chart separates today, Friday, from yesterday, Thursday. As you can see, yesterday, Thursday, as we went into the close, we made a run up to the weekly zone above, and then we closed the session at the weekly zone below. And you can see how many times yesterday this weekly trading zone was support and 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 support. The most likely thing to happen at a zone is consolidation. Second most likely thing is rejection. That's what this is right here. Third and least likely is the slice, but it does happen. This candle sliced through the zone like it wasn't even there. When that happens, when the move runs out of steam and finds, in this case, support at the weekly trading zone, what we expect is for price to retrace back to the zone it sliced through and then continue in the direction of the slice. Okay, now that happened yesterday afternoon. Last night's short CTA for the Dow was 360.70. On the first trigger, price made it down to, we'll call it 360.40. So that's 30 points, $5 a point, $150 per contract traded. Then we got back above the zone, or above the trigger, and we dropped to basically 20 points, $5 a point, $100 per contract traded. But actually this trigger, when the next candle opened, we continued lower. So really this trigger led to this low. And so the actual low on this candle, 360.20, that's 50 points, $5 a point, $250 per contract traded. And we got back above the trigger, triggered again, and this time we ran to the target. On every short alert, the final trade to target is the weekly trading zone below. On every long alert, the final trade to target is the weekly zone above. And so this zone is 35,985/990. So that's 80 points, $5 a point, $400 per contract traded from the published entry to the published target. Here's where we opened. We moved higher. The BBC held as resistance. That's what we expect until proven otherwise. And then we just consolidated for quite a few hours. Price finally made a move. This is off the London Open down to the weekly zone, which when we drop to, we expect to be support. When the market finds support, it turns around and goes and looks for resistance, which it found at the BBC. Once the market finds resistance, it's going to go look for support. And it found support here. Bounced back to the BBC. Took us down to the trade to target. Price has now gotten back above the BBC, but got rejected at the weekly trading zone. And so we're sitting above the BBC. And so the next high probability move from here on the Dow would be a move back up to the weekly trading zone. It's an opportunity somewhere from, about 210 up to 240. The zone is at 50/55. On the Russell, no trigger on the long side, but we did trigger on the short side. Let's open this up a little bit. There we go. Okay, so the first trigger, basically price just got rejected. The CTA was at 21.96, and this candle put in a swing low at 95.4. So not even a full point, basically just rejected. Price behaves at a CTA quite often the same way it behaves at a weekly trading zone. Up here you'll see rejection. On the second trigger, from 21.96, we made a drop to 92.5. So we'll call that 3.5 points. That's what it is at $50 a point. And then price got back above the trigger, made a run to the zone overhead. We expect that to be resistance, as it was yesterday. Now remember, these zones were published Monday morning at 6:15 a.m. Eastern. We've published them since December 14th of 2009. Once they're published for the week, we don't change them, manipulate them in any way whatsoever. They're carved in stone for the entire week. So being in a long trade here, knowing ahead of time that the market will likely run into resistance at 22.18, that's pretty valuable information. And being short on this candle, knowing that the market will most likely find support at 21.82, again, pretty valuable information. Price looks like it wants to get back above the trigger. If it runs into the BBC, we expect it to be good resistance, just like it was here, which will give us another trigger on the short side for the Russell. The NQ. No trigger on the long side. On the short side, this is where the market opened last night. We got below the BBC on the pullback. The pullback held. It held more often than it doesn't. That sent us down to trigger at 7:06 and took us to a low. We'll call it 67. So 7:06 minus 667, that's 39 points at $20 a point. The market made $780 per contract available on this trigger. Price gets back above the trigger, triggers again, giving us a swing low at 624. So that's 75 and 6, let's just call it 80 points, $20 a point, $1,600 per contract traded. Then we got back above, triggered again, right here, We put in a low at 74. So 25 points, 30 points, $20 a point. Then back above the trigger, triggered again. Took us to the low of the session. We're already below the lowest weekly trading zone. The swing low is 510. So that's basically a 200 point move at $20 a point. That's $4,000 per contract traded right there. And every single one of our passport holders got these trades last night in their Telegram channel at 6:15 p.m. Eastern. Price looking to pull up now to the BBC. It might spike it just enough to get above the trigger, and then that will give us another trigger to the downside. We had 1, we had 2, we had 3, we had 4, and possibly we may get a 5th. So that covers the major indices, the S&P, the Dow, the Russell, the NQ. The S&P, remember we said we need to be patient, let the market show us what it's trying to do, because our strategy is so simple. We just want to do what the market's doing. That's all. But we have to know with certainty what the market is trying to do. 20% of the time, the market doesn't accomplish what it sets out to do, because the balance between buyers and sellers shifts mid-trade. That's why over the last 179 weeks and over 9,400 individual alerts, on average, 20% of those alerts do get stopped out based on that $300 risk profile that I explained. So, printing a green candle, when we get to the BBC, we found resistance here, 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 and we would expect to find resistance again here until proven otherwise. How would we know that it's been proven otherwise? Because the green candle would close above this swing high right here, which would give us this window of opportunity. So either way, unless the market just goes quiet and trades sideways the rest of the session, we'll have a long trade or we'll have a short trade. Both high probability, low risk trade opportunities. Crude oil. Where did the short trigger go? Let's see. The short trigger was 78.60. I guess we'll have to draw a line. It hasn't triggered yet, I don't think. 78.60. So we're almost at the trigger on the short side. 78.60. On the long side, we basically got rejected, rejected, rejected. The long trigger was 80.40. And this little move was worth $60, and this little move was worth $70, and this move was worth $20. Basically, just rejection across the board. We still have red and falling in place. We're below the step line. So the one I would be watching for is the trigger at the CTA 78.60, right there. And then you've got this window of opportunity right here, down to the weekly trading zone, which is the trade 2 target. On gold, on the short side, now notice all the consolidation here at the zone. We got rejected, we consolidated, we got rejected, consolidated some more, we spiked it, but ultimately the zone held. Although we did get a spike low enough This morning when the news came out at 8:30 a.m. Eastern, took us from 1784 down to a low of 81.3. So that would be $270 per contract traded. The long side is 1797. And we're just about to trigger. What's the high so far? $96.9. So we're 2 ticks away from having an official trigger on the long side. Okay. We're above the BBC. We've got blue and climbing. We're above the step line. We've taken out this previous swing high. As we trigger 97, the trade 2 target is up at 1808, but you should be aware of potential resistance here. Potential resistance here. And right before you hit the zone, potential resistance there. Okay. Knowing where the market is going to run into trouble in either direction is usually as simple as just looking left. When we were kids, our parents taught us when we crossed the street, we look both ways. When you're trading, you only have to look left, okay, to see where your obstacles are, where price is going to potentially run into resistance. Because the last time price traded up to this high, sellers stepped in and drove us all the way down to the zone. And look at how many hours we spent trying to break through that zone. Couldn't do it, couldn't do it, couldn't do it, couldn't do it. And this was a news-driven event. This is why we caught this spike to the downside, which quickly recovered and now has us almost at the trigger. We've come within 1 tick of the trigger so far. Silver. Short side 21.98, and we dropped to 21.94. So that's 4 pennies. 4 pennies is $200. The long side 22.46. We've not reached that yet. Once we reach it, if we look left, we have no real obstacles in our path, and we could trade right up to the target, which is at 57. When the price of silver moves $1, $1 is 100 pennies. If you're trading futures, that's worth $5 grand, profit or loss depending upon which side of the trade you're on. So a 50-cent move, that's worth $2,500. A 25-cent move is worth $1,250. Okay. Silver is volatile, margins are high, so if you choose to trade silver, you need to be very careful, and you need to have a large account. Okay. And the final one, the euro. The euro has not triggered on the short side or the long side. Okay. This is the start of the session last night. We traded up to this weekly zone and consolidated, and then we made a run from zone to zone, where we've now been consolidating for roughly 2 hours. A reminder, these zones are published Monday morning, 6:15 a.m. Eastern. And once they're published, they don't change. And for the last 12 years, the way price behaves around a weekly trading zone, that has not changed either. When we move up to a zone, we expect it to be good resistance until proven otherwise. Brings us back to the daily chart of the S&P, where we've pulled up to that 38% fib. Based on the 30-minute chart, we're looking at resistance here. And that resistance could very well push us back down to the low of the session and the 50% fib retracement. If you'd like to become a part of the CFRN family, you need a lifetime passport to do so. You can get yours at eminifuturestrading.com. Now, all traders will end up in one of two groups, the 9 out of 10 who fail or the 1 out of 10 who succeed. Why do 9 out of 10 fail? Basically because they don't have anyone to hands-on teach them how to trade. It's really that simple. Imagine trying to become an electrician with no one to teach you. I mean, you could read books about it, you could watch videos about it, but you better be careful if you touch a hot wire. Imagine trying to learn how to fly an airplane or do brain surgery from reading books and watching videos. I don't want to be your passenger. I don't want to be your patient. Everyone knows that in every career field, they're going to need training. An instructor who teaches them how to do whatever it is that they want to become, whatever career path they've chosen. But 9 out of 10 traders don't have that. They sign up for a course, which doesn't come with a live instructor 2 hours a day. The beauty of what we offer is you have a live teacher 2 hours every trading day, putting on, taking off trades, live in real time, explaining every trade he takes, every move he makes, and the rule behind it. And answering your questions while you trade along in your simulator until you qualify to go live. Along with the live instruction 2 hours a day every day. As a passport holder, you also have access to unlimited one-on-one mentoring. We teach you our proprietary methodology, which is honestly quite simple. And it works not only with futures, but stocks, with crypto, with Forex. You own the indicator set for life. You receive the Logic 247 alerts around the clock. You receive the concierge trade alerts every evening. All that and much more. It's everything a trader needs, all under one roof, one low price. Get yours today at eminifuturestrading.com. Call Valerie if you have questions at 949-42-EMINI or send an email to support@cfrn.net. And with that, we'll wrap things up with our good word for the day. Last 4 days we've been talking about how to be fruitful. We'll finish out the week with that same topic. John 15:2 says, He prunes those branches that bear fruit for even larger crops. As a believer, you must be willing to submit to the pruning process, because He, God, prunes those branches that bear fruit for even larger crops. Pruning entails cutting off dead branches and cutting back living branches. Both are necessary to shape the tree and stimulate growth. Professional pruners will tell you that most people are too hesitant when it comes to pruning. But God is not. He not only cuts off that which is sinful and superficial, He cuts back that which is alive and successful. A business that's doing great, a satisfying relationship, or a plan that seems to be working well. God doesn't just cut off the bad, but the good in order to give you the best. It's not pleasant, but it's absolutely essential for spiritual growth. What does God want in your life? John 15:8 says, more fruit. It actually says much fruit. So you are going to be pruned, like it or not. You may be undergoing pruning right now, and it may not all be dead wood. God cuts off things we view as productive so that more fruit may be produced in our lives. This can be perplexing. We believe we're being faithful, so we are puzzled, even frustrated by His pruning. We cry out, "Why are you doing this, God? I've given my business to you, but it's unprofitable. I have committed my health to you. Now I'm in the hospital. I've been tithing faithfully, yet I'm going bankrupt. What's happening?" Hebrews 12:11 holds the answer. No discipline seems pleasant at the time, but painful. Later on, however, it produces a harvest of righteousness and peace for those who have been trained by it. So, my friend, if you feel that you're being pruned right now, just know you're being pruned to produce much, even greater fruit. And that's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.